Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. In our first segment today, we're taking a closer look at the latest earnings report from the Bank of Montreal, or BMO, which reveals some interesting trends in the mortgage landscape. According to the report, more than 30% of BMO's customers who renewed their mortgages in the first quarter of 2025 experienced lower monthly payments. This is certainly a positive development for those borrowers, though it's important to note that the majority still faced higher payments at renewal, regardless of whether they had fixed or variable rate mortgages. On average, monthly payments increased by $150 to $200, equating to a rise of 6 to 10% for most borrowers. Despite these payment pressures, the data from BMO suggests some relief could be on the horizon. The bank anticipates that looking ahead to 2028 and 2029, average mortgage payments might decrease by approximately $50 per month. This potential reduction in payments could make future renewals easier for borrowers, provided that interest rates continue to decline. An interesting development is the shrinking number of negative amortization mortgages within BMO's portfolio. Negative amortization occurs when the payments made by the borrower do not fully cover the interest owed, causing the mortgage balance to grow rather than decrease. As of now, only 2% of BMO's mortgage book, amounting to $2.9 billion, consists of variable rate mortgages in negative amortization. This is a significant improvement from the peak of the rate hike cycle, when 62% of BMO's variable rate borrowers were in negative amortization. BMO attributes this improvement to a combination of factors, including rate cuts and moderating payment increases for those renewing their mortgages. The bank also reports a sharp decline in ultra-long amortizations, with the percentage of mortgages with amortizations of 36 years or more dropping from nearly 25% in the fourth quarter of 2023 to just under 8% in the first quarter of 2025. Now, over 64% of BMO's mortgage portfolio has an amortization period of less than 25 years. However, it's not all good news. BMO has observed a material rise in the percentage of mortgage holders who are falling behind on their payments. The 90-day delinquency rate for BMO's mortgage portfolio has increased from 0.17% in the first quarter of 2024 to 0.29% in the first quarter of 2025. Beyond mortgages, the bank is also keeping a close watch on its unsecured lending portfolio, where it anticipates more challenges. In addition to these financial pressures, BMO is monitoring the potential impacts of escalating trade tensions and uncertainty surrounding United States tariffs. These factors have already begun to affect business confidence, with some borrowers delaying major purchases and investment decisions. Chief Financial Officer Tayfun Tuzun highlighted the challenges posed by these trade wars, noting that they introduce uncertainty and disrupt the efficient allocation of capital. Despite these challenges, BMO's earnings report does highlight some positive financial metrics. The bank's first quarter net income, adjusted, reached $2.3 billion, marking a 21% increase year over year. Earnings per share, also adjusted, rose 19% to $3.04. Equifax Canada released its fourth quarter 2024 Market Pulse Consumer Credit Trends report, revealing a significant increase in total consumer debt in Canada, which now stands at $2.56 trillion. This marks a 4.6% rise from the previous year, driven largely by non-bank auto loans, which saw an 11.7% year-over-year increase. Average non-mortgage debt per consumer has now reached $21,931, surpassing pre-pandemic levels. The report highlights a growing financial divide among Canadians. While some consumers are benefiting from lower interest rates, mortgage holders in Ontario and British Columbia are facing increasing financial pressures. Rebecca Oakes, Vice President of Advanced Analytics at Equifax Canada, pointed out that although some consumers are experiencing financial improvements due to lower interest rates, others, particularly in Ontario and British Columbia, are struggling with high living costs and higher payments upon mortgage renewals. The report indicates a troubling trend for Ontario mortgage holders, with more than 11,000 mortgages recording a missed payment in the fourth quarter of 2024. This figure is nearly 3 times higher than in 2022. Mortgage holders who have fallen behind on payments are carrying significantly higher balances, reflecting the impact of interest rates that remain higher than pre-pandemic levels. The 90-plus day mortgage balance delinquency rate in Ontario surged by 90.2% year-over-year to 0.22%. Other provinces have also experienced increases in mortgage delinquencies, though to a lesser extent. British Columbia saw a year-over-year increase of 37.7%, Quebec by 41.2%, Manitoba and Saskatchewan by 0.6%, and the Atlantic provinces by 15.7%. Interestingly, Alberta was the only province to report a decrease in its delinquency rate, which fell by 3.6%. In addition to mortgage challenges, Ontarians are also struggling with other forms of debt. The 90-plus day non-mortgage balance delinquency rate in the province increased by 46.1% year-over-year, surpassing the national average increase of 18%. Toronto, specifically, saw its 90-plus day non-mortgage delinquency rate rise to 2.06%, one of the highest rates among major Canadian cities. Rebecca Oakes of Equifax Canada noted that mortgage holders typically prioritize keeping up with their payments, so the sharp rise in missed payments suggests deeper financial strain. Depending on the type of credit, missed payments have increased anywhere from 10 to 80% compared to pre-pandemic levels. On a more positive note, new mortgage originations increased by 39% year-over-year in the fourth quarter of 2024, indicating a recovery in the Canadian housing market. First-time homebuyers returned to the market with a 28.2% rise in purchases compared to the fourth quarter of 2023. However, despite the growth, those renewing mortgages are facing challenges. Over 50% of new mortgage originations in the fourth quarter of 2024 were for renewals and refinancing, up 10.6% from the previous year. The average balance on renewed mortgages rose by 2.9% from the previous year, and many consumers renewing their mortgages continue to face higher payments due to interest rates that remain above pre-pandemic levels. Approximately 1 million mortgages set for renewal in 2025, originating from low interest rate periods in 2020, may see significant payment increases despite recent rate reductions. Credit card debt has also been on the rise, increasing by 7.8% in the fourth quarter of 2024, albeit at the slowest pace since 2022. Seasonal spending in December reached a 2-year high, with the average credit card purchase per cardholder, adjusted for inflation, increasing by 2.2% from 2023 to $2,228. Younger and lower-income Canadians are particularly struggling with rising missed payments on credit cards, auto loans, and lines of credit. Despite recent rate cuts and goods and services tax relief, challenges persist for these groups, especially in managing consumer debt and housing costs. Rebecca Oakes also highlighted the potential impact of United States tariffs, emphasizing the need for a balanced approach to debt, affordability, and trade policies to ensure economic stability in the coming year. As we approach the end of today's episode, let's turn our attention to an exciting event on the horizon for Ontario's mortgage professionals. The Canadian Mortgage Brokers Association, Ontario, or CMBA-ON, is gearing up for its annual Gala, conference, and trade show, which is set to take place on March 26th and 27th in Vaughan. This event promises to be a significant gathering for those in the mortgage industry, offering a wealth of opportunities for networking and professional development. The event will kick off with a gala and awards evening on March 26th at Vaughan's Universal Event Space, followed by the conference and trade show on March 27th. As Michelle Campbell, CMBA-ON's vice president, mentioned, this conference is designed to empower mortgage agents and brokers with the latest industry knowledge. Campbell emphasized the importance of fostering meaningful connections and inspiring innovative approaches in a market that presents both challenges and opportunities. Attendees will have the chance to engage with 70 exhibitors and gain insights on navigating the current housing landscape. The conference aims to leave participants feeling more connected and informed, with a lineup of industry heavyweights providing valuable insights and updates. Notably, Bank of Montreal's chief economist, Doug Porter, will deliver a morning update on the economic outlook in the months ahead. With ongoing economic uncertainty, including the potential impact of United States tariffs and a possible recession in Canada, the fate of the spring housing market remains uncertain. This event will address these concerns, providing a platform for prominent lending executives and industry leaders to discuss the current lending outlook and the next steps on the political front. A highlight of the event will be a panel discussion featuring lending executives like Andrew Gilmore from CMLS, Devin Adram from TD, Elena Robinson from First National, and Nick Ciprianu from River Rock. Additionally, Tanya Woods from Questrade Financial Group will lead a session on political developments affecting the industry. Attendees can also look forward to insights from mentalist Kevin Hamden on leveraging psychological techniques to enhance client relationships. The trade show component will provide attendees with valuable face time with exhibitors and the chance to speak directly to lending partners and service providers about pressing concerns. As Michelle Campbell noted, renewals are a significant focus this year, with many homeowners coming off super low rates. Brokers are encouraged to stay proactive, helping clients understand their options and find the best solutions to stay ahead of market changes. The Gala and Awards Night promises to be a memorable occasion featuring a cocktail hour, dinner, speeches, an awards presentation, and a post-awards DJ and dancing, capped off by late-night pizza. The event will also raise money for sick kids, supporting a worthwhile cause. As Campbell expressed, it's an opportunity to celebrate the achievements within the community while making a positive impact. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.